Hi, welcome to the Market Alert for Thursday, the 9th of January 2025. So, FOMC meeting minutes show almost all Fed members see higher inflation, and that is cited towards Trump, of course. It's already started, so the hawkish shift is Trump's fault. When, of course, he's not even in office yet, but so this is old inflation, as it were. US stocks were choppy as participants suggested mixed data, tariff reports and FOMC meeting minutes, a gilt sell-off, and stocks and bonds chop. Dollar bid while GBP lags as gilts hit hard. That's in the UK, of course. That's the equivalent of the US Treasury bonds. Economic news, none today. Market's going to have to make its own mind up what it does. But of course, tomorrow it's waiting for the non-farm payroll numbers. Next week, we've also got CPI as well. Wednesday of next week, US CPI. No forecasted numbers there yet. So we'll discuss those on Monday when they're released. Okay, let's have a look at the choppiness that continues in these markets and kick off with the Dow. So in the Dow, market is certainly sideways there. You can see that at the moment we've got a defined range. Got a bit of buying coming in and supporting the market yesterday. Bit of, say, demand there. Markets retrace slightly as well with this demand. So currently sideways for the Dow, and also, it looks sideways in there, but of course there's a decent range as we can see there. So 100, 200, 300, 300, 400 point range there for the Dow yesterday, but very choppy. It's up and down, not down, and then straight back up. So very choppy there for yesterday. Market's finding support overnight, and just need to take out the close, the 200 MA and yesterday's high in order to start moving back up in the daily chart there. Meanwhile, in Europe, despite the gilt sell-off in the UK, we can see there that we've got some selling pressure coming into the German DAX there. Also got the market failing to close above the 89% retracement as well. Market's gone through all of these other levels, but struggling with that 89% level there at the moment. So the market needs to take that out if it is to move higher back to the all-time high of 20,527. Europe's falling apart economically, particularly Germany, and yet the market's going back to all-time highs. The smoke and mirrors continues. So yesterday, market up while there was no trade from the US, and then the numbers came out at lunchtime. Market down and then sideways to higher, but just needs to get back above the DP. It's already above the close. The averages are looking good as the market can make its way back to the high and then the all-time high. And in the S&P 500, this too is very much sideways like the Dow as well. Nowhere near the all-time high at the moment, which is 6,099, but I've no doubts it'll make its way there. A lot of volume yesterday as well in this market. So a tiny bar as well. So definitely some support coming in for the S&P there. You can see again very sideways and choppy. In the FT 100, this moving higher despite the gilt issue. Needs to just take out this area of resistance. This is an ascending triangle type pattern. Usually blasts through this sort of area. And there you can see yesterday we had the sell-off in the mid-morning, market back, and just going to have a look at yesterday's high for this market too. Meanwhile, in the US dollar continuing to make its way back, it needs to take out 109.53. 110 is the next upside target. Where it's getting this strength from, I do not know. But it is, and that's all that can be said for it really. So look at the metals. And in the metals, kicking off with silver, market still below the 200 MA, still trying to get through $30 and hold it. Well, it is at $30, but trying to hold it before it can move higher. A bit of volume coming in there over the last few days, but we are already reaching the overbought situation there in the daily. 30-minute chart, market was slammed at 3 o'clock, not at 1:30 yesterday on the news, but they did buy back in. Market now sideways to higher, trying to move to the upside. In the yellow stuff, we can see the market is sideways to higher there as well. It is starting to trend back up a bit, as can be seen there. And in the 30-minute charts, you can see yesterday moving up. But again, the slam coming in on the unemployment numbers yesterday, which actually moved lower. So yeah, it's all hinged really, or the next move is certainly going to be dependent upon the NFP numbers tomorrow. So we'll have to wait and see. All right, let's have a look at the gold-silver ratio. And yesterday you can see that moving higher, but this moving down slightly overnight, moving a bit more than gold. But if the US dollar heads up to 110, then the gold and silver market are going to come under pressure. So let's have a look at yesterday's trades. So the market was sideways in the pre-market session. As soon as the cash market opened, prices moved sharply higher, heading back to the all-time high, to Tuesday's high, which it achieved. No problem. We had a potential sell that wasn't filled within the 3 bars, and the market stopping out the trade before it was filled. And then we moved to the upside, making a new high, taking the profits off the table. The market then returned back to the downside, started to move down, but found support at the entry price before prices then traded sideways and then reversed and stopped the trade out, therefore a loss. And then in the afternoon the market was sideways, and you can see they're trading down to the DP, just below the DP, finding support. We had a potential buy signal there that wasn't filled as the stop was taken out before the entry price was hit. This time it was hit, market moving up and trying to move higher, but finding resistance, taking the money off the table, moving down, and there you can see also just getting out of the trade as the market found support at this level as it came back down there. You can see that that's an 89% retracement as well. And that was the only other trade during the afternoon. Market very, very quiet, and then just started to move up a bit in the evening as they waited for the FOMC meeting minutes. But yeah, not a lot to report. Went desperately quiet in the afternoon. And of course today we've got no news at all, so the market's going to have to make its own mind up. So let's have a look, see what's happening overnight, and just compress the prices so we can see where we are. And you'll see that we're a long way off the high, but that didn't matter yesterday morning, did it? As the market soon rallied up 150 odd points yesterday, and today we've got 150-ish points there at the moment where the market's currently trading to get back to the high and then down to the low. It's a lot easier to get down to there, of course, which is again around 100 points. So certainly in the mid area there for the market at the moment. Just reset the chart. We need to take out the 200 MA if we are to move higher, currently below it, and the close will try and hold this market as well before prices even attempt to get down to the low of yesterday, which is down there at 2241, as the market also needs to take out these psychological levels as well. If it does go down to the low and has a shakeout, then watch this area. And if you've got profits off any signal or any other analysis, then you may want to think about taking it as well. Okay, that's it for this one. Let's see what the market does when it kicks off at 8, but don't expect a lot because there is no economic news and the market's waiting for those non-farm payrolls for tomorrow. Okay, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.